And as always, thank you very much for joining me here today. Now, before we start the episode, I have a huge announcement. NTD Business is relaunching. So what that means is we're getting a whole new look, a brand new design, and we're also rebranding ourselves as well. We're going to be called Business Matters, and it's going to feel like a whole new show, but of course, with all the great content you're used to now. You'll be able to see the new show right here on Thursday on YouTube. There won't be an episode tomorrow though, but stay tuned for that. I think you'll be very impressed with how the new show is going to look. All right, first story today. Chinese banks could be taking on a lot of risk with regulators' latest effort to revive the real estate market. Now, sources say Chinese regulators are pushing banks to speed up approvals of new loans to private property developers under the whitelist mechanism. Now, this whitelist program enables cities to recommend suitable residential projects to banks for financial support. And banks have been reluctant to grant new loans to property projects. They have mostly been extending maturity dates and lowering interest rate of existing loans. Now, the directive, according to one source, is saying that regulators gave banks until the end of June to finish approval and issuance of all loans. And of course, the aim here is to try to revive the sputtering Chinese real estate market. And two more American companies are about to feel the financial pain of China, taking another step toward self-reliance with semiprocessors. The Financial Times reported that China has introduced guidelines to phase out U.S. chips from Intel and Advanced Micro Devices, or AMD. This is in favor of using local chips. Beijing has been trying to boost its local semiconductor industry and reduce its reliance on foreign firms, especially with the U.S. curbing exports of cutting-edge chips to China. Now, one analyst estimates that this could be a $1.5 billion hit for Intel. Last year, China accounted for more than a quarter of its revenue. Sales in China totaled about 15% of AMD's sales. The new guidelines also seek to sideline Microsoft's Windows operating system and foreign-made databases in favor of domestic options. And now onto markets. Wall Street's main indexes slipped on Monday, the first session after the biggest weekly percentage gains for the indexes this year. And this is coming as investors gauge the likely path of interest rates from the Federal Reserve ahead of a key inflation data due later in this holiday-shortened week. Here's a quick recap of markets.
U.S. stocks ended lower on Monday ahead of key inflation data due later in the week. The Dow shed 0.4%, and the S&P 500 and Nasdaq both lost roughly 0.3%. But it was the first session after all three indexes notched their biggest weekly percentage gains of the year, leading Lisa Erickson, head of Public Markets Group at U.S. Bank Wealth Management, to chalk up Monday's losses to profit-taking.
We're really having a little bit of a reset market today. If you just think about 2024 as a whole, you have a situation where the market has been fairly Goldilocks, encouraged both by signs of inflation slowly and bumpily moving to its target, as well as the Fed on pause and then hopefully potentially moving to pivot. And yet the macro fundamentals generally coming in better than expected. And so we've really actually had just quite a nice run in terms of equity prices.
Last week, the Federal Reserve maintained its guidance for 3 interest rate cuts this year. Markets are now pricing in a more than 70% chance of a rate cut in June, according to CME's FedWatch tool. In company news, shares of Boeing rose more than 1% after the company announced a broad management shakeup that included the departure this year of CEO Dave Calhoun as the plane maker looks to resolve its aircraft safety issues. Shares of Walt Disney gained 3% after Barclays upgraded the stock to overweight from equal weight. And Micron Technology, whose memory chips are used in artificial intelligence-related hardware, surged more than 6% to close at a record high. The February reading of the Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is due on Friday, when markets will be closed for the Good Friday holiday.
And analysts are warning that U.S. manufacturers will be reliant on China and others for lithium by the end of the decade. That is, if the U.S. does not boost its own supply. Now, America's push to produce more of its own lithium is getting pulled back over legal uncertainties, and that is because it is up to each state to set regulations. Right now, it's unclear who owns the lithium in salty brines, how much the battery metal should be valued, and who will pay to process it. And this ambiguity is giving companies pause. For instance, Texas approved a law last year to draft lithium regulations, but did not give a deadline to finalize regulations. And in Utah as well, a law was passed to preserve water levels in the Great Salt Lake, which led one company to actually abandon its plans to produce lithium there. By 2030, according to estimates, global lithium is expected to outpace supply by 500 metric tons annually. Meanwhile, as election season heats up, the Federal Reserve could be playing a role, actually, in shaping voters' opinions about the economy. So let me explain here. First of all, investors are now predicting 2 rate cuts before the November election, one in June and one in September. This would actually be a boost to the economy that President Biden needs. And polls are showing that Americans actually dislike his handling of the economy, which has been dragging on his re-election campaign. The Fed only controls the overnight borrowing rate among banks, but a cut to the benchmark rate usually translates to lower mortgage rates, cheaper car loans, and easier financing terms for small businesses. Republican challenger Donald Trump has been quick to criticize how the rate cuts would tip the scale in Biden's favor. Trump has been painting the picture that Fed Chair Jerome Powell could make a move to help Democrats. And speaking of Donald Trump, he's returning to the stock market, and the former president stands to reap a sizable payout in the process. NTD Sean Marshall has more.
Shares of Digital World Acquisition jumped on Monday after the blank check company announced that it has completed its merger with the Trump Media and Technology Group, TMTG, which owns social media platform Truth Social and is backed by former U.S. President Donald Trump. Digital World's shareholders had approved on Friday the merger with TMTG, paving the way for the deal to be completed and cemented a major windfall for Trump as he fights a string of legal cases against him while contesting the 2024 U.S. presidential elections. Digital World shares rose as high as $51.71 on Monday as of the time of this story. Trump is set to own most of the combined company, or nearly 79 million shares. Multiply that by Digital World's $51 Monday high, and the total value of his stake could surpass $4.1 billion. Research firm SimilarWeb estimates that Truth Social had roughly 5 million active mobile and web users in February. That's far below TikTok's more than 2 billion and Facebook's 3 billion, but still higher than other alt-tech rivals like Parler, which has been offline for nearly a year but is planning a comeback, or Getter, which had less than 2 million visitors in February. But Trump won't be able to cash out the deal's windfall immediately unless the company's board makes changes to a lockup provision that prevents company insiders from selling newly issued shares for 6 months. Sean Marshall, NTD News.
And big news here. 3 of the biggest names in tech are under investigation by the European Union, accused of not going far enough to comply with the new digital law. The European Commission suspects Apple, Google, and Meta of falling short of its landmark Digital Markets Act. The DMA requires dominant online platforms to give users more choices and rivals more opportunities. And this investigation will include whether Meta's subscription for no ads provides a real alternative, and if Apple and Google allowed app developers to direct users to cheaper options outside their app stores. Meta says subscriptions are an established business model and it plans to continue engaging constructively with the Commission. Apple said it is confident that its plans comply and will continue to engage as well with the Commission. The Biden administration has announced the single largest industrial decarbonization investment in U.S. history. The U.S. Energy Department will award $6 billion in federal funding to subsidize more than 30 industrial projects to cut carbon emissions across 20 states. The Energy Secretary said the projects would slash emissions from various industries. That's including iron and steel, cement, chemicals, food and beverages, and more. She says together the projects will eliminate 14 million metric tons of pollution each year. And that is actually equivalent to removing some 3 million gas cars off the road. The funding comes as President Biden fights for re-election. He and key officials are headed to battleground states to tout the administration's economic policies. And Costco is keeping a closer watch on its $1.50 hot dogs, drinks, and pizza slices. A Reddit photo from a Costco in Orlando, Florida shows a sign that says, people without an active Costco membership card won't be allowed to buy items from the food court. This rule was always in place, but analysts say it was never really enforced. However, the membership card rule officially becomes effective April 8th. Costco memberships brought in nearly $4.6 billion during the 2023 fiscal year. Gold Star memberships at Costco are $60 per year. That's the same price set back in 2017. A U.S. judge yesterday threw out Elon Musk's lawsuit against a nonprofit group that faulted him for allowing a rise in hate speech on his social media platform X, formerly Twitter. Here are the details.
In his decision, the judge said it was, quote, evident that Musk sued the Center for Countering Digital Hate because he didn't like that it faulted him for allowing a rise in hate speech on his platform X, formerly known as Twitter, and he thought CCDH's research would hurt the platform's image and scare off advertisers. The judge wrote, quote, X Corp has brought this case in order to punish CCDH for CCDH publications that criticized X Corp, and perhaps in order to dissuade others who might wish to engage in such criticism. The decision is a blow for Musk, who has styled himself as a champion of free speech, but since paying $44 billion for Twitter in 2022, Musk has faced widespread criticism for firing staff at X who policed misinformation and for allowing more harmful and abusive posts. Musk's own speech has often drawn complaints. In November 2023, he endorsed an anti-Semitic post on X that said members of the Jewish community were stoking hatred against white people, saying the user spoke, quote, the actual truth. Musk has denied being anti-Semitic and sought to make amends, including in a January visit to the former Nazi death camp Auschwitz in southern Poland. While there, he claimed the platform was making progress.
The outside audits that we've had done, at least the ones that we've had done, show that there was the least amount of anti-Semitism on X. If you look at all the other social, it's never going to be zero if you've got 600 million people on a platform.
An attorney for CCDH said Monday's decision shows that Musk, quote, cannot bend the rule of law to his will. X, in a statement, said it plans to appeal.
Boeing's board has begun the search for a big hitter to take the helm of the troubled plane maker following the turbulent tenure of CEO Dave Calhoun, with many industry executives and analysts predicting it will seek an outside remedy. Here's the report.
Boeing is hunting for a new boss. The aerospace giant said this week that Chief Executive Dave Calhoun would leave by the end of the year.
We believe in our airplanes.
He's departing amid a deepening crisis over safety and quality standards at the plane maker. That follows January's mid-air blowout on a 737 MAX jet operated by Alaska Airlines. Though no one was killed in the incident, it raised new doubts about how well the firm's best-selling aircraft is made. The model had previously faced a long grounding over 2 fatal crashes traced to a design flaw. Now investors want to know who the firm could choose to steer it out of crisis. Chief Operating Officer Stephanie Pope had been seen as the heir apparent, but was this week named to run the firm's commercial airplanes division instead. Analysts say that could be a sign Boeing wants to bring in an outsider to signal it is serious about change. GE boss Larry Culp is one name being mentioned after he led a sweeping overhaul at the conglomerate. American Airlines chairman Greg Smith, who is also a former Boeing executive, is seen as another candidate. Having worked at the plane maker and one of its big customers, he knows both sides of the industry. Whoever is chosen, analysts say the firm seems to want a clean break with the past. Unions say it's time to put an engineer in charge again. That after widespread criticism that Boeing has put shareholder value ahead of product quality.
Adam Newman has submitted a bid of more than $500 million to buy back WeWork. This is the office sharing company he co-founded and propelled it to a $47 billion valuation before it fell into bankruptcy. And this is according to people familiar with the matter. Here's more on that.
Adam Newman is trying to buy back WeWork. He founded the office sharing firm and turned it into America's most valuable startup. But he was forced out in 2019 amid financial turmoil and accusations of eccentric behaviour. Now a Reuters source says Newman has bid over $500 million to buy it back after it filed for bankruptcy in November. The offer is a fraction of the $47 billion value once put on the company. It wasn't immediately clear how Newman was financing the move. Last month his lawyers sent a letter to WeWork saying he was exploring a bid. That was said to be backed by prominent investors including Daniel Loeb, founder of the Third Point hedge fund. However, the fund later denied making any commitments. WeWork would only say it regularly received expressions of interest and was focused on its restructuring efforts. The company scrapped a planned IPO back in 2019 amid questions over its valuation and governance. It went on to rack up losses as the global health crisis saw more people work from home. That sparked a plunge in demand for office space.
And electric vehicle startup Fisker's talks with the large automaker for a potential deal have collapsed. And the New York Stock Exchange plans to delist the cash-strapped EV maker's shares due to abnormally low price levels. Here's more.
Electric vehicle maker Fisker looks to be in deeper trouble. The startup said Monday that it had abandoned talks over support from a major automaker. It didn't name the firm, though Reuters had previously reported discussions were underway with Japan's Nissan. Now the New York Stock Exchange plans to delist its shares, citing abnormally low price levels. The stock closed at just 13 cents on Friday, before being suspended at the start of this week. It all comes a week after Fisker paused production, fanning fears over its survival chances. The firm has faced a slew of supply chain snags, production problems and funding difficulties. All that has sent its valuation crashing to less than $100 million. In February, it flagged concern over its ability to keep operating and said it would halt new investments while it sought a partner. A bankruptcy would mark the second failure for founder Henrik Fisker. His previous automotive firm collapsed in 2013. Raising funds has proved hard for EV startups, which have little revenue while they try to ramp up production.
Russian athletes who have qualified for the Paris 2024 Olympics this summer will need to undergo a vetting process by the International Olympic Committee before being invited to compete at the Games. Here's what you need to know on that.
After Russia's invasion of Ukraine in February 2022, the IOC initially recommended athletes from Russia and ally Belarus be banned from international competitions. But they were then allowed to qualify for the Paris Olympics with some caveats. They will be competing as individual neutral athletes, or AINs, without their flags, anthems, and emblems. James McLeod is the director of Olympic Solidarity.
AINs will not participate in the parade of delegations teams during the opening ceremony, since they are individual athletes, but an opportunity will be provided to them to experience the event.
They must also pass an IOC vetting process. Athletes must not have actively supported the war in Ukraine or be contracted to any military or security agency, and all anti-doping criteria must be met. Athletes will also have to sign the Conditions of Participation for Paris, which contains a commitment to respect the Olympic Charter, including the, quote, peace mission of the Olympic movement.
Our experts currently project that under the most likely scenario, 36 AINs with a Russian passport and 22 AINs with a Belarusian passport will qualify for the Olympic Games Paris 2024. The maximum number, which is unlikely to be reached, would be 55 and 28 respectively.
The IOC established the Individual Neutral Athlete Eligibility Review Panel to carry out the work of evaluating each athlete and their support personnel. The 3-member panel consists only of IOC members. They are Nicole Hoverts, an IOC vice president who competed in synchronized swimming for Aruba in 1984, Pau Gasol, a 2-time NBA champion who won medals with Spain, and Yu Samin, an IOC member since 2016 and a South Korean table tennis champion. The IOC's chief ethics and compliance officer, Pakaret Gerard Zappelli, is secretary of the panel. Moscow has criticized the IOC's decisions, saying the Olympic body was infringing on athletes' rights and destroying Olympism. The Russian Olympic Committee was also suspended by the IOC in October for recognizing regional Olympic councils for Russian-occupied regions of Ukraine, further angering Moscow. Russia plans to host its own international multi-sports event, the Friendship Games, later in 2024.
And thank you very much for watching NTD Business. That's all the stories we have for you today. And once again, stay on the lookout for the relaunch of the show on Thursday. It's going to have even better content and an entirely new look. Thank you very much, and I'll see you soon.